All right. What's going on, everybody? Please let me know if you can hear me in the comments so I'm not talking to myself here for the next little bit. In this live stream, I'm going to go through, really just all my weekly prep. So, how that begins, where it starts, how it finishes, and just kind of see what we got going on for here going into next week now. I think my idea on the overall market is I think it's pretty solid. I feel pretty good about it. And the one caveat to everything is currently where we closed that on Friday or yesterday. Um, I don't want to say it didn't give us all the answers, but where we did close is a pretty important spot. So, and I know, oh, it's important spot, blah, blah. And I'll explain why. I will explain why, I promise. But I just want to make sure everybody can hear. All right, good. All right. So as always, I start with the overall markets. So I specifically look at NASDAQ more often than not. It has been a leader for quite some time. ES has really caught up quite a bit. So really, it's pretty interchangeable at the moment. There is one glaring difference in the both of them, and that's something that I'll get to as well. But also a third piece to the puzzle, which is the dollar. And the dollar does not look very good. So typically, when you have a weak dollar, that would lead to higher prices on the indices, right? For a while there, we've been chopping around on both of them for the most part. And that has kind of led to a little uncertainty for more of a medium-term outlook as to, where I think we're going. So if you're listening on YouTube, hit that subscribe button, drop a like. I appreciate that. I just got partnered with them, so that's sweet. If you're on X, spam that heart button. Whoever's got the most at the end is the winner. 2 times in a row. I don't know if he's on here right now, but Seeker, you have won 2 times in a row. So congratulations on that. So let's get into it. Let me just get over here and share my screen really quickly. And also, I'm going to go through a lot of the names that I have been following for a while. But if you guys have any names specifically you want to take a look at, feel free to drop them into the comments, and I'll try and get to them. Sometimes they get backlogged, and it takes a while for you to get your request in. So I apologize for that, but it is a part of it. And if you do put it in the chat, I kind of make an announcement. All right, after this one, I'm not doing anymore. So even if you do have to get off, it could be a little bit of time. You could always come back to the video. I have them all on YouTube, and that way you can, get your requests complete. So let's get into it here. First and foremost, as always, we'll get into the overall market and NASDAQ. So let me do this, and let me take off this little thing right here. Where is it? All right, great. So we are good. All right, so into QQQ on the weekly. So I look at the futures tickers. So for anybody new here who is just joining in, while I do trade futures predominantly, I do trade options and such as well. But to me, an important aspect to that would be if I can get more information, I'm going to take it. So the fact that futures trades 23 hours a day, 5 days a week, while you're going to get pretty big gaps from those overnight sessions on, say, I don't know, SPY, SPX, QQQ, the gaps typically aren't as large when you look at futures, just based on the amount of time that has passed in order for a gap to be created, right? So while that gap is created, on SPY or SPX, there are actually levels that are being created in that overnight session, right? Just because we're sleeping doesn't mean the rest of the world isn't up and operating. So, for me at least, that'll allow me to be a little bit more precise instead of just taking a trade off of a gap, right? And, if you use gap theory the way that I would, we have a gap higher, we would anticipate that gap acting as somewhat of a support or, a bounce level. If we were to gap lower, that's showing us urgency to move lower. That level can be viewed as a resistance level or a, brick wall, whatever you want to call it. But there are times when those gaps are so massive that it's really hard to take action on that, right? A lot of trading strategy and theory sounds all good and great until it's time to put it to action. And you're like, oh my gosh, I have to risk 40 points here, or I got to risk $3 on this gap down, right? And you might be anticipating a gap fill, which is, something that everybody always anticipated, but it's not necessarily the truth. It doesn't necessarily have to fill the gap. You can look at any chart. It doesn't matter. Go back in time. You're going to notice that a lot of the time gaps don't completely fill. Sometimes they do. Sometimes they don't. It's not it has to do this. No, it doesn't. But anyways, that's why I chart using QQQ. The movements, everything is going to be the same. You're just going to notice different numbers on the sidebar. So with QQQ, another week where we really don't have, we haven't really been granted all that much excess information here. And what do I mean by that? We haven't really created any sort of imbalance to the upside. That's one thing that I always look for. And an imbalance to the upside would be something as simple as, I don't know, here, 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 right? Any of these. But we can view those as we go down the road later on as levels of support, right? So up here, since we gave this one a second test, and this dates back 3 weeks, we haven't created anything. We've kind of just been consolidating up here in this area above our previous all-time high. So now we're going to take a look and see if the daily kind of offers us any more additional information, right? And that's the way I always tend to kind of backtrack myself, right? So if we're to take a look here now at the daily, you're going to notice that yesterday we did take out an all-time high. So just for reference, here was what my range was previously set at, and I can walk you through this as well. So if we take a look, you're going to notice we can go from the first right candle. So the way I look at it and the way I map my ranges is I just look to the left. Have we taken out a high or a low? And by a high or low, I, specifically meaning a swing high or a swing low. So here would be our swing high. And, in the previous situation, our swing low is down here. Okay, that was our previous run. Here was our discount retracement. There was our run for highs. So now what I had it set, previous to the last couple of days, it was something like this. Here's your low to your high. You'll notice, and last week I was kind of frustrated by this because I didn't get that discount retracement that I wanted going into this week. The market sort of pumped the last 2 days to close out the week, and I didn't get this discount retracement. And while, that's unfortunate for me that I missed out on that opportunity, completely warranted, right? We can justify that. Here's your daily fair value gap. Look how perfectly it bounces right off of it and gone. So at that point, I say to myself, the range isn't set, right? And what do I mean by that? The range isn't set. To me, price needs to retrace back to 50% or our equilibrium fair value in order for us to have a set and structured range in a specific point, right? So if that's the case, I wouldn't move this because, again, this is our low of our price swing. We have not yet set the high. So I'm going to slide my fib, and I don't trade using fibs. It's just a way to measure the range. But here is your range set. As we get to 50%, there it is. That locks it in. We get back into discount. So below 50% of a bullish price range, we would view that as discount. Here's your bullish fair value gap, right? This is what I'm going to get to in a second. But then there's your run for highs. So when that occurs, I say, okay, my model is complete. It's 18,628. Great. Now what? Okay, so then from that point, I would slide my new fib to what was the low that started this price run, and to take out these highs, and it was simply low to high, right? So here's where it gets a little sketchy. Okay, while we did hold on to very, very small, so sometimes you got to zoom in and just see, but look at that, a very little gap, right? That is a bullish volume imbalance. Okay, and you'll notice that despite a wick giving you a little bit of a heart attack, the body is telling you the story. The body is the one that respects and closes above that bullish volume imbalance. Okay, here's the thing. And, while this would suggest a run for more highs, on the flip side of that, I look down here and I see these relative equal lows. And to me, that is terrifying. So, you might look at it as, oh, it's a double bottom, blah, 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 right? There's a difference between relative equal lows versus that double bottom that everyone conventionally thinks of as a kind of a reversal type move, right? And that would be more of a turtle soup, we would call it. But if you look at it from this perspective, what had to have happened here, right? Just, I guess just common sense, really, right? Somebody had to go long here, right? Some people, a bunch of people, whatever it is, a lot of money was going long at that point, right? So the fact that we stopped dead in our tracks right here without taking out stop orders from this initial long, that tells me that somebody had to step in yet again, right? Think about it. If we were to stop right here, what had to have happened? People had to go long again. So to me, that is double the pool of liquidity. The liquidity from the longs here and the liquidity from the longs here. So double the pool of liquidity that's resting below. And if you buy into the idea, like I do, that the market runs on liquidity, aka money, without that, the market kind of just sits flat, flat lines. Think about it. Think about a penny stock, right? The necessary liquidity in order to move it is not currently on the chart. So if it's not currently on the chart, what does that mean? It needs to come in from an outside source. On something like NASDAQ, to me, the liquidity is absolutely already here on the chart, and it's right in front of our faces. And that's why oftentimes when you see a higher time frame liquidity sweep, that's when you're going to see your volume bar go ballistic, right? And that's why I think volume is not a good leading indicator, and I think it's kind of useless in my opinion. But anyways, moving on to this, you're going to notice these relative equal lows below. That is very a little sketch for me. Okay. So with that being said, I move on to an hourly time frame, and this way I can map everything out and perfect, get as precise as possible. Okay. Here were those equal lows that we were talking about, and we can look at it even from this, much tighter perspective. And now we have even more information, right? We have hourly levels now. We can look at the 4 hour. We have 4 hour levels, right? There are more levels that we could see inside here that we possibly wouldn't see if we're looking at just a daily time frame. Okay. Um, and again, that's not a bad thing, right? We would still anticipate the daily to play out the way that we expect, but we can be more precise in terms of our entry and exit to make these actually actionable rather than just say, oh, look, it worked, right? We want to be able to take action on it. We got to be precise with it, because if we have a stop loss that is, I don't know, a massive amount of points, odds are you're probably going to get stopped out prior to the trade kind of carrying out the way you want it to do it, right? So if we're to look at it from the hourly time frame, and you'll notice, okay, we took out this high and we took out that high with this price run, and that's why I have my range mapped the way I do. Obviously a big knife, but again, we're still in a bullish structure. So I'm this big imbalance right here, I got to wait and see. Okay. So as we retrace down into discount of this hourly bullish range, we run into this hourly bullish fair value gap. In addition to that, we also have an hourly breaker. So we have a low, high, lower low, run through highs, and we would anticipate that level, 18,242 to 18,203, to act as a support level moving forward, right? So I actually traded this candle, and ultimately I was wrong, but it ended up netting me about $3,800. So was it really wrong? It didn't necessarily go to where I wanted to go in that specific price run, but you'll also notice I have this black box, and I'll explain that in a second. We didn't get to where my ultimate destination was, but that's still a very good trade. And the way that I manage that is just simply put, and this is the way that I kind of operate all the time with futures specifically, and something that I'm trading on a shorter dated time parameter, I guess. Once I hit 20 points, 20 points is good for me, because if I break it up this way and I can get 20 points 3 times a day, that's $1,200 a day. That is great for me. I'm more than happy with that. So that kind of takes a lot of the thinking out of it. Now, when you get an opportunity where it goes ballistic like that, I don't want to cut it off. But when I get to 20 points, that's when I'm a little bit more aggressive with my stop loss in profit. So I drag that thing up and make sure that even if this trade doesn't go the way that I wanted it to, I'm still going to be able to cash out pretty successfully. And if you'll notice, I actually have the video. I'll edit the video and I'll send it out here later on today or something. But anyways, you'll see that we rejected here, and this is a bearish breaker. So right now we're sandwiched between a bullish breaker and a bearish breaker. So a bearish breaker would be a high, low, higher high, and a break of that candle's low. We would anticipate that acting as a resistance level moving forward, which indeed we did. So moving forward here on NASDAQ, again, it's an important level. Everybody loves to say that, but here's my explanation as to why. One, I think it is extremely dangerous for the bulls if those relative equal lows are to be snagged. Why? Reason being, if we are to sweep that will technically shift our market structure on a daily time frame to bearish, right? That doesn't necessarily mean that we don't sweep that low and bounce back up into here. But from that point, I'll actually kind of change my idea, the one that I've had since October. I've retweeted it and shared that one tweet a million times where I said I like this low back in October. But the reason why I would be looking short at this point was because we got a higher time frame market structure shift. And if we get that higher time frame market structure shift, I feel that we're going to start to retrace on what would be a higher time frame, aka the weekly, which we have not yet had a weekly imbalance once. Okay. And if you look back in time, weekly imbalance shows you lower. Weekly imbalance right here shows you lower. Weekly imbalance shows you lower. So when you do see that weekly imbalance, that would tend to be the market kind of tipping its hat to you and offering, hey, it's time to retrace on a higher time frame, right? And if I look at it this way, that doesn't mean I think the market is crashing by any means, but a slight reset. And what I mean by that is just a discount retracement, right? So from this point now, this discount retracement to a lot of people, trust me, is going to feel like the end of the world. I promise you that. This is what, 2,000 points, just about. Yeah, about 1,600 points down. That's just a 50% of the range, right? And we could still justify retracements down into these imbalances right here. To me, if we are to create that, but again, I'm not bearish until I'm proven to be that way. I'm not trying to call top. Calling top gets you stopped out 850 times over the last 6 months, and you cry on Twitter and you act all aggressive and yell and scream because you've been wrong for all this time. And I would prefer to be a little more even keeled and zen and allow the market to show me that, because look what happens oftentimes when you do get that market structure shift. What does the market do? Comes back for you. There's your chance. Don't worry, you'll get an opportunity, right? So why are you trying to run into a absolute rocket right now, trying to call top over and over and over again? Is it really worth that tweet to say that I called the top? I don't know. But that's currently where I'm sitting on NASDAQ. So really, to me, the importance of this and not sweeping this low, because if we sweep this low, I'm feeling we're going to those relative equal lows. And if that's the case, then that's trouble. Now I'm going to throw one more wrench in there, and that would be ES. So I haven't charted this one, but I'm off the top of my head, I know what it is. But here's ES on the weekly. You're going to notice just a tad different, okay? Just like last week did not take out last week's low. So let me just extend this. This was our previous price run and where my model completed on ES, which was low, high, discount retracement. See how deep this one got into discount in comparison to NASDAQ. NASDAQ only got to the 50, 62% range. But here's your deep discount into a bullish imbalance. You'll see the absolute perfection of that and the run. And as we take out that high, that is where my model is complete. And when my model completes, one of two things happens. And this is no kidding, right? You're either going to get an imbalance up through previous all-time high, which we have yet to do. This is a bullish order block, just worth noting. But you're either going to get that imbalance up higher, or you're going to get a sweep and retracement. Okay. And so far, we're kind of hanging out up here, but there is no imbalance that has been created. We have the order block, and this is what I'm curious about on ES, and I'll show you why. If we were to go over here to the daily time frame on ES, and I zoom it all out right here, okay, you're going to notice, one, we have a pretty big range, but two, if I were to just look at the most recent price run that we had on ES, okay, so, and I'll show you, kind of walk you through where, this has been successful. So this high took out numerous highs in the past. Here's your discount retracement, check, bullish order block, one more time, and run through. That would be the completion of my model right there. And here's where we currently sit. So that would be our current range, right? Took out that high with this price run. Our retracement into discount, again, just like NASDAQ 2 weeks ago, never came. And that's okay. We can justify it. It's just not really the most optimal for me buying something in premium of a range, but the range wasn't set, and that's okay. So you'll see as we come here, there it is again, no discount retracement, and one more time. So now here's where it gets a little tricky, and this throws a wrench into things, okay? So you have your bullish range here on ES, right? You got your retracement thus far. The thing here is, not only do we have equal lows again, but the equal lows here aren't going to shift market structure on ES as they would have on NASDAQ. So does that mean NASDAQ will remain the leader and lead the downside charge? Or could ES come through and kind of save the day in a way, right? So again, let me see if I can just drop these together, and I'll just show you the difference between them. And oh shoot, I'm gonna have to rechart this. Hold on. Ready? So just for reference, so again, there was your run, no discount retracement. Notice how here there's a discount retracement on NASDAQ, 50%. Check. Here's your bullish imbalance, right? So move can be justified. But if you look towards ES, you're gonna notice at this point, whoops, right here, right? There it is. No 50% retracement. And we didn't even retrace at this point either. So no 50% retracement, the range isn't set. Is that telling us that the range is not set on ES, but it is set on NASDAQ? So who's going to be the leader at this point? Because once that high is taken out with that price run, my range needs to change, right? I need to move it like this. And again, you do have that one small volume imbalance right there on NASDAQ that can, be the justification for that run higher that we got on Friday. But this is where we're currently sitting, and it is, to me, this is very, very complex and confusing, just for overall directional purposes. I'm still going to be using NASDAQ as my driving force, moving forward for the markets as a whole. For a long time, I used to really specifically trade SPY and SPX, and I just, over the last year or so, I just noticed that NASDAQ was much more of a leader throughout the entire really the entire year. And that's why I pivoted and started trading NASDAQ much more than I was trading ES. ES was much more slower. And think about it. Just think about the actual, what's the word? Jeez, I'm drawing a blank. Composition of, say, NASDAQ versus ES. It's very different, right? You got some energy names and SPY. You got some energy names. I'm sorry, you got not specifically as weighted as heavy in tech. So that is just one thing that we can consider and think about as we move forward here. So I'm going to continue using NASDAQ as my driving force here to kind of see what's next. But just a very interesting comparison, to say the least. Now, one more thing, and then I'm going to get into some individual names. So sorry if you're not an index trader or anything like that right now, but I am going through this. And the reason why I do that is because I've just noticed this over time, that even if you have a great setup on, an individual name, if the overall market is not kind of moving in the direction that you want it to be going in, it might not play out as quickly and as efficiently as you would like. So that's why I always use the overall market to help in creating my bias for my smaller time frame or my individual names that I'm kind of trading. So but last but not least, let's slide over here and let's look at the dollar, because again, this is one indicator that I don't think really anybody uses, but it turns out it is, to me, the best one to use. But so if we're looking at dollar here, you'll notice I have my range set from our highs back in September down to our lows, which are relatively equal back in July of 2023. We got our pop and our retracement into where? 50% of a bearish range. There's your bearish imbalance right here. So for me, my model would complete at 99.57 on the dollar. And you'll notice that we did get this little bump, and that doesn't necessarily need to be an absolute meltdown, because we did catch that bullish fair value gap right here to run us up a little higher. So we have this untouched bullish fair value gap right here. And below that, you really aren't working with much to keep this thing up, right? And if you're a bear and you want market to go lower, you're really going to want that to catch and send us higher, preferably into that bearish order block. We also have a bearish order block right here. But my model is going to complete at 99.81. It's just a matter of time. Does it happen prior to a bounce into one of these order blocks or something like that, or does it immediately go down, finish my model, and we move on? And at this point, market would be, I would believe, much higher than where we currently sit. So that's where I'm at on the dollar as well. So really, my bias on the dollar would be bearish, and ultimately, I know it's not all that helpful or anything, but it is pretty neutral right now, really reliant on that one kind of shift at this moment for NASDAQ, right? So that would be just those names for now. So let's come on over here. I just want to take uh, a look. Oh, sweet. I'm just seeing these comments now. So um, DIA. Okay, yeah, we'll look at that one. Yeah, we'll look at a few of these. Can you talk about manipulation of highs versus manipulations of lows and what it signifies? I'm not really sure what that question means there. Nobody. Can you just elaborate a little bit more on that? Um, if we just wick under, it could stay bullish. Yeah, and at that point, I think you could see that ES kind of take over there. Crab. Close under, I start to reconsider. Yep. Yeah. So that's the thing. Who's going to be the leader in this situation if those equal lows are taken out? And the equal lows, to me, again, if I'm using the idea that like that's double the pool of liquidity for me, like, that could generate a move to the upside too. That's the difficult part. And taking out those lows, I would assume. I know you shouldn't assume, but I would assume that that would be enough for ES to get into discount of its range as well. So, um, that's what's to come. I mean, I'm not necessarily bullish on the dollar, so that's kind of why I would just wait. I'm personally just waiting to see if it's going to prove it that we are going to shift, and if we do shift that structure, that's fine. But until then, I'm not going to try and call top. Everybody loves to call top. It's just, I don't know. Um, hey, don't we need a closure below that relative equal lows on the daily on NQ for market structure shift, or is a wick enough for your system? Yeah, so going to what Crab was saying, actually, so sweeping that low, to me, that would shift market structure. But at that point, you would expect ES to get into discount of its range. And, two of them working in conjunctions in an important thing, right? Think about it. If there was one day last week where you had all the other indices were moving higher and you had NASDAQ, which was just puttering out and moving around, like you kind of want them all to move together. And if they don't move together, you're probably going to see some choppy conditions. And NASDAQ that day was a nightmare. I don't know if it was Tuesday or Wednesday. I forget which day it was, but um, yeah, you kind of want that all moving together, and very similarly to the dollar, like on days, and we've noticed it more recently than in the past, but the dollar has been moving in the same direction as NASDAQ and SPY. So if that's the case too, you're probably going to notice you're going to see a lot more choppy garbage conditions as we move forward. Um, so yeah, that's that. But all right. Since we do have a few requests right now, I'll run through the requests first, and I see Amazon is one that I've been following anyways, so we could do Amazon first here. Um, there it is. Okay. All right. So here we go. Where we currently sit on Amazon. Okay, so you're gonna notice that we completed my model here by taking out that high. We had our low, high, discount retracement, run for highs. Beautiful. So where we currently sit, this is a previous, and again, I'm just using this as a way. Let's see if the fibs actually work or if they matter. Uh, so this would suggest 190.57. We'll see. I still think 188.65 is in the cards. So if I'm looking at Amazon from this perspective, this is where it gets a little tricky. What was the start of the price run to take out these highs and these highs? And it was that high, no discount retracement to that high there. And with that, you'll notice we have a massive range. Do we need to go and take out those relative equal highs first? That's my question. And I believe so. And currently in a weekly bullish fair value or volume imbalance. I'm sorry. So you'll see gap higher. Okay. And there's our retracement back down into it. So it's not bad. So we'll have to see. Is this equal lows here? Let me just say low 65.74. 65.75. Nope. So 2 weeks ago, it swept the low by 74, 70. Yep, it swept it by 1 cent and took off. So that's where I sit on Amazon. See, you're going to notice here as well that there are some pretty bullish setups and there's some bearish setups. So there really is a lot of uncertainty, in my opinion, as to the next step for the overall markets. But so there's Amazon on the weekly. Let's crunch it to the daily and see if there's any sort of opportunity. Apologize for these levels because they are old as can be. Let's see. Well, yeah. Low, high, discount retracement, run for highs. There was buy side liquidity. That's good. Below 149.91 was a breaker or a market structure shift on the daily time frame as well. And obviously this can go and this can go. Haven't traded much of Amazon, but let's see. You know what? Let's just do this. We'll remove them. Okay. So after taking out that high, after our little rip right there, you'll notice very similarly, there's your range. Bang. Okay. So also no discount retracement here. That's unfortunate. So as we continue higher, okay, there it is. This is what our current range is looking like. So do we get down into this bullish imbalance, sweep that low, and take off for another leg higher, which is a possibility, of course? Or do we come, and again, this is, yep, these are those same lows that we talked about, how we took just by 1 cent and shot it up. So this is also a bullish breaker right here. I'll show you how. Low, okay, high, even by 1 cent, lower low, and a break above that high, we would anticipate this breaker candle acting as a support level moving forward. So do we come down here, get into the breaker, sweep these lows, and take off from that point? That is a possibility for sure. So that's kind of, I just want to do that, okay, just to bring my eyes to it again. So now let's check the hourly and see if we can knock this out even better. So currently on your hourly, here is Amazon. So you have a bullish structure. Here's your discount retracement. Bingo, bullish imbalance. Check, run for highs, stop dead in its tracks. What did we run into here? We ran into a bearish fair value gap. There it is. Okay. One more time, down to lows, sweeping these lows, generating more liquidity. Also reaching into the lowest imbalance right here. That would be a fair value gap that was not filled. And there's your run, beating this high, which essentially is also creating a hourly bullish breaker. Low, high, lower low, run up and through, and we would anticipate this level acting as a support level moving forward. So not bad. Pretty good actually. So we'll kind of see how this hourly range shakes out. If this hourly range is to fail, that's when we can get a little bit of a turtle soup action, and we can look towards our daily time frame where we had those equal lows here, right? So yeah, that would be Amazon. I know we have CPI next week and stuff, so that could be a little fiery. But again, I don't like really try and front run those events, but to be prepared and maybe have some alerts set at some specific spots, I think going into the week like that is I think that's great. So that would be Amazon there. So let's see what else. Okay. Jim had a question. When setting the range after taking a previous high, is it the low of the run or the first green candle going up? So yeah, this is a good question, and this is something that I've talked about it a bunch. But if you look at it from this, right? Okay, even if we're going to take this most recent hourly run on Amazon, right? The way that I look at it is, if we have a green run here, okay, and we just look, did we take out a high in this run? Yeah, we did. We took out that. Okay, so let's just see, does that red candle come down into discount? And if it doesn't, then I'm going with the entirety of the range, right? But if it does, hold on, let me just no, actually, I'm gonna remove this. But if that red candle does come back down into discount, even on that little microscopic range, that's when I would use the green that starts the run rather than the low or the swing low in that situation. So does that make sense? Because on this run, right, we have to be able to justify, like, why did we get stopped in our tracks here? We took out that high, we took out these highs, and we got into that imbalance right here. So this could be a little mini range run in itself, right? This didn't quite get to 50%, so the range wasn't set, and that's why I had dragged the high up to here. But so does that help there, Jim? as we wait, I'm gonna roll over and see what do we got. Okay, let's look at Meta. Meta is one that's just been absolutely ballistic for a long time now. So, whoops. Okay. Oh, this one's hilarious. We'll do it. So if you look at Meta's range all time, we never had one discount retracement until this move back in 2022. So from inception, so it was like an 8-year range setter on the weekly time frame on Meta. So you have your low to your high. Here's your discount retracement, turtle soup, the sweep of that low. There's your run for highs. So is this really like a crash or a market a bear market? I mean, it to me it just seems like a discount retracement on a higher time frame. That's all. But there's your discount retracement. There's your turtle soup, meaning we took out higher time frame liquidity on that low just by a tick. You'll see 89.13, right, versus 88.09, so by $1, and we ran. So the way that the range would look from this point is our low, whoops, okay, to our high. Okay, great. Now, from this point, we can take a look and see massive range again. Okay. But if we just take into note, like this doesn't really, I don't want to say it doesn't mean anything, but it took us what, 9 years to set that last range. Is that something that could happen again? Yeah, it possibly could, right? That doesn't mean that there's going to be many price fluctuations like this inside it, right? Look at all this. That can for sure happen, but to get a discount retracement into a range, that's seems to be a very rare occurrence in this situation. So if we look, obviously we're bullish, we have a huge range, but if we look down here, we have this big bullish fair value gap right there. I know it's far away, 453, but that's your weekly bullish fair value gap. Let's just zoom in, come on in and see that. Let me get rid of this sucker. Hold on. Okay. You're going to notice that that's our big imbalance there. Still in premium of the range, technically. That would be another volume imbalance. This would be a fair value gap. Whoops, there it is. And then you got a couple down here that have been retraced into and takes off. Okay, so just from that perspective, that's where we're at. I can't say I have a target for something that's never occurred before, right? So when things are at all-time highs to me, I can't just say I think Meta's going to 620. Where am I getting that number from? I'm not pulling it out of where. Like I'm not like a fib extension guy. I have not yet seen the precision of that. You'll notice that a lot of the time when we get that retracement down into these 6.2 or whatever, the 0.78, that's the ones that all these fib guys use. Just look left. There's a bullish imbalance there, and if there's not a bullish imbalance there, I believe, or I would I would bang the table on it, actually, that it's probably not going to be effective in that situation. So that's why I don't trade using fibs. I think it's kind of useless. But anyways, here is your current weekly range on Meta. Here we go over to the daily. Okay, very similar. Buy side liquidity, previous all-time highs. There it was. Again, just another situation where there is absolutely no retracement for us. And if that's the case, that is fine. But here we go. Let's come on over here and look at our I guess current range. So the range that took out that high right here, it's massive again. So is it a point where we just continue to grind? And you'll see what I mean by that. Okay, that would be what we currently have. But look at this. Every time that we've made a bullish move, right? Hold on, starting from here. Okay, there's your retracement into it. There you go. Okay, how about this one? There's your retracement into it. There's your go. There's your retracement into it. There's your go. This one defies the logic here. Oh, no, it doesn't. There's your run. There's your retracement. There's your run. Okay. Here is it again. So where's our next little gap higher? Let's see. There it is. Okay. There. Oh, whoops. Wrong thing. Here. There it is. Whoops. There's your discount retracement. Bullish imbalance. Check. Again, if there's no bullish imbalance, then it's not useless in my opinion, but there it is again. Okay, now look at it from this run, low to high. Here's your discount retracement. Okay, it's good to know. So we got into it and left it to close the day on Friday. So now let's come over to the hourly. Okay. And if we look at our hourly range, again, this is just a way to help us be a little bit more precise. We just have to keep in mind that we have this range that we've never set. Whoops. Okay. See, no 50%, similar to ES. Okay. No 50%, no 50%, and no 50% yet. Okay. So just keeping that in mind doesn't necessarily have to set, but how can we use this and as a way to kind of, say you really like meta, you really want to be a part of it. So instead of using that overarching range, which we have to keep in mind, right, our higher time frame, right, it's still very far away, but we can also look at it from this. What was the run that took out that high right there? Okay. Simply put, whoops, low to high. No discount retracement, right? Nope. And there it is. Okay. So that would be your current range on meta. Here's a bullish imbalance in discount of a bullish range. And so far, so good. You did reject this bearish fair value gap, but, and you did create a bearish breaker. High, low, higher high. So here is your breaker candle, the low of that sequence right there. And I would turn that black for my breaker. And you also have a bearish fair value gap, rather large up here. But do we shift market structure? That's the question. Does this hold? And to me, it's something as simple as, okay, well, if we're going to use our discount imbalances as our, kind of driving force here for our trade idea, how can we map this out and not, subject ourselves to the ultimate risk, which is all the way down here, right? Remember that initial range that I had mapped out. How can we do that? So basically, what you can do is, okay, say you want to use this imbalance as your trade idea, right? Or your criteria for your trade. You could look for entry inside that imbalance. And in this specific case, for me, my entry would be below this little low. Okay, see that? See how we got into it already and took off? I would want to see it turtle soup, higher time frame liquidity, sweep that low, and then look to go from there. Now, if this isn't going to work, right, I got to know where it doesn't work, right? And it's something as simple as me putting my stop loss at the low of the candle that created the imbalance. Okay, so this is the candle that created the imbalance. This is the low at 496. So essentially my risk on this would be about $2.20 of options premium for a potential run to our, things are going to get a little dicey here. I'll give you that. More of a speed bump in a sense. It's going to slow up because we do have a big imbalance in price, and that's at 509. So does that risk reward make sense to you? If it makes sense to you, then that's a viable trade. Like that's the way you should always kind of look at it, because if you start just buying, randomly and say to yourself, the trade really doesn't go bad until 193, so that's fine. But then you could potentially be holding the bag for $9 hoping it bounces. And then when we take that low, you're going to stop yourself out. That's the thing about how you want to be as precise with your entries as possible. That way you're not just kind of shooting from the hip and hoping that it works out when there's there is a chance that it doesn't work. We have to always be understanding of that. So I don't necessarily love the fact that we created that bearish breaker up here after making another all-time high. But again, if you don't have any risk management and you can't really, deep down in yourself, like when it doesn't go your way, you tend to hold things and just start holding bags. To me, like using a method like this is very effective. And the reason I say that is because, it will be outlined for you, your trade idea, with much more limited risk. On the flip side of that, if you can't accept that you are going to lose sometimes, then, I think you're in trouble no matter what strategy you use. That's something where, to me, especially with trading futures, it's great because I can literally move my stop on screen and, kind of take a lot of the thinking out of it, and that way I don't think twice. But that's meta there. So let's pop back over and let me see if there are any comments. Sorry, I still haven't set up my side monitor yet. I know I've had this computer here for about 3 months, but I don't have it, so I have to flip back and forth. NQ daily. I think you selected a red close down, so that was where I was confused. Okay, let me just pop back over to that quickly. Here's your daily. Yeah, yep. So that was the low of the price run, right? Low of the price run that took out that high, right? Or in reality, it would be something like this, and you'll notice that despite that, we never took out any highs in that process. So that's why I have it the way that I do, just as the swing low. All right, so let's see. Oh yeah, Pan W is absolutely a headache. So let's go. Let me just see if I missed any up here. Oh, Adobe and then DIA. Sure. I know I'm being really thorough with these, but I just want to see if this is me doing the first prep of the week and looking at the market for the first time. So I want to see if I can find any setups for myself. Okay, so here's Adobe's weekly. Now, if we look at this, there's really two perspectives we can look at this one from. If you're to go back in time, I'm sure if we, I don't want to bore you guys to death, but if we were to continuously go all the way back and see, each run in itself, and you'll notice that's likely a discount retracement from that swing low, check, run for highs. We can look at it from here. This being our little turtle soup move, and that would be right here up to here. Okay, so right, that would be our bullish perspective on this. This is dangerous, really deep into discount here. But if we look at it from a bearish point of view, and this is a bearish run, so you have a bullish run, or I'm sorry, you have a bullish run inside an overarching bearish run over in an overarching bullish run, right? All-time bullish run. The market is very fractal, and it's broken down into specific runs. So, but if we're looking at it from the short-term perspective here, we have what was the run that took out that high right here. And to me, it was something as simple as this low, to high. Great. Okay. Here is no discount retracement just yet. Okay. So let me just remove this for now. Okay. And you'll notice that despite sloppy, we really couldn't disconnect from that. Why? This is a bearish order block. Up close candle followed by a down close candle that takes out the open of the previous. Okay. So there's the open of the previous. That's the down close that took it out. That also created a bearish for value gap. But you have a daily breaker as well, which is here. Okay, and I'll walk you through that one as well. You have a high, low, higher high, break below that low. We would anticipate that low candle of the sequence to act as a resistance level moving forward. So far, so good. At this point, your real discount in this sense would be you have a volume imbalance here. You have a gap. Okay, there's that. You have another volume imbalance there. You have a bullish fair value gap here in discount, right? You have a bullish fair value gap here too. This has been retraced into 3 times and ultimately got going. But, this has been filled quite a bit. It's currently not in discount of the zone, so I really wouldn't look towards that for any, although you are taking out multiple sets of lows here, right? That low. So that would be relatively equal to that low. But then you get discount down here. You got a bunch of discount bullish imbalances down there. So yeah, I if I had to guess, I would really anticipate Adobe probably to go lower, probably 498. So we'll see. Yeah, that is a setup where, unlike Meta and unlike what was the other one? Amazon, where we kind of saw through the silver lining and we saw that bullish point of view. Just from this perspective here, I don't really see it. The bullish point of view at all, yet at least. When it gets a discount, that'll be a different story. But and that's not to say this can't run, right? I'm not saying I'm not always right, that's for sure. But just I use this analysis as a way for me to be able to ultimately put together a trade idea. And when something is in premium of a specific range, so over that 50%, I feel like my risk reward isn't as good. And when it's not as good like that, I tend to avoid. So here's just a different little perspective, and this is this is why looking at different time frames, because you're going to see it right now. Looking at different time frames really is extremely helpful. So we saw on the weekly that we still have that massive bullish run and have yet to get into discount. But if we look at our daily time frame, right, taking out these highs right here with that price run, here's your discount retracement, and there's your run for highs. So in that right there, my model would be complete. So now, what was the run that took out that high here? Here it is. Okay, there's your run, and here's your failure. There it is. That sets up your bearish breaker, and you have now a bearish market structure shift on Adobe. right here. So what was the price run that took out that low right there? Well, to me, it's this low. And you might say, why wouldn't you use this? Look at that. It already completed my model. So took out these lows with that price run. There's your discount retracement. There's your puke. Okay. From this to here, whoops, there it is. There's your discount retracement, taking out that low, run for high or run to discount. I'm sorry. So this works both ways. It's not just a bullish one trick pony. This is you can absolutely use this model as a bearish model as well. There it is. There's your discount retracement into a bearish imbalance. There's your flush, and that's why I would use this. Okay. So you'll notice we got to 50% of our bearish range, and we've rejected thus far. So yeah, 528, I'm thinking this would be, where is it? Oops. Okay. And this is, again, for a long time, I've been super bullish, and I know everybody. Oh, you're a perma bull, you're this, you're that. No, I would just prefer to allow the information that's available to prove it to me that we are actually bearish, right? And this is an instance where it's proved to me that it's bearish, right? I'm using the daily time frame. I use the weekly. Overall, on the weekly, it is a bullish run, but we know that price likes to retrace into discount. And if that's the case, then we can expect lower prices. And that would be the same expectation I have here, right? Um, you know, and that's kind of just the way that I look at it from this point. But I'm waiting for NASDAQ to do something like this, so I will be bearish, right? I'm not a one trick pony. I can do it both. It's just I'm not going to try and short things in a bullish run. And again, I'm glad I haven't, because just like all the people on Twitter who were shouting short from the hills, they were doing that 3 months ago too. Don't worry. All you have to do is just type in the money symbol and do spy and type in whoever's name. So if you want to look at, I don't know, somebody drop one of these guys in here. I don't, somebody shouting from the rooftops, short, 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 short. Guess what? You can go back and see when they've been saying that from. It's not as impressive when you call the top when you've called it 75 times on the way up. Sorry. So that would be Adobe there. And let's go. I got DIA for you next there. Okay, so I'm looking at Adobe, not bearish at all. It's neutral positive. So right now, I think you're just using what you see on like Webull as your indicator for it. I just gave a very elaborate, kind of explanation as to why it would be. So let's see. DIA, very good. So let's see DIA. And okay, so on the weekly time frame here, you did secure that volume imbalance. Now, this is not the first time I've seen a volume imbalance on something that has almost immediately been erased. So I'm just leaving that out there. I like the fair value gap. That's a little bit more of a distinction for me. So I'm not saying that this isn't the imbalance to get it done. I'm just saying that oftentimes, and I'm sure we're going to run into this a bunch. But when you get that volume imbalance, oftentimes that can lead to a bullish order block. There's one. Let's see. We got more. Don't worry. Where are we? Let's see. Where? Bullish order block, gap down. Let's see. So that wouldn't be the deciding factor for me in that sense. James. Could it be? Absolutely. I'm not trying to say that it's not. Let's just see if the daily shifted. If the daily shifted market structure, then I'll buy it. But just worth noting. Let's see. What's this low? Low is 370.54. Low is 370.56. So we have relative equal lows on. Yikes. Okay. We have relative equal lows there on Dow. But let's see. Okay, what was the price run that took out that high right here? Again, we're going to try and keep it tight, and that way, we'll get more immediate feedback in a sense, right? So there's your low to your high. Again, why would this bounce here? Every single move on this chart is justified. Okay. Beautiful. Okay, there it is. Run for highs. That would be our current price run. Here's our first retracement into discount. There is you run into a little bit of a rejection here. You have bearish volume imbalance. Okay, rejection, 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 lower, sweeping deeper into discount here, into this bullish fair value gap, sweeping this low and this low in the process, and holding on for dear life, as you can see, with the beautiful respect for that imbalance. There's your run up one more time. There is a gap down, volume imbalance, and currently here. So this is, Dow is very similar situation as I would have on NASDAQ, as I would have on SPY, where I don't necessarily, I'm not front running it. When it takes out this low, then I can be bearish. But until then, not quite, not quite, not quite, not quite. And again, why is that? So if we're to shift this low, right? Think about it. Every time we've taken out a low or a high on this chart, what happens? Just you guys, I'm not saying it. You guys can say for yourself. Okay. We bounce, but we've also been in a bullish structure, right? So while we could still bounce, if the structure is flipped, so what I mean by that, and this is imaginary, this hasn't happened yet, but here it is. Took out that low with this price run, low or high to low, retracement into discount. I'll just do it just to show you guys the efficacy of this model. Boom, down to lows. My model's complete. On to the next. Here it is one more time. High to low that took out these lows. Here's your discount retracement. So if you are looking at it from a bearish perspective and you're not afraid that the overarching trend is going to get you out of here, the expectation would be for 382.92 at the very least, and ultimately 383.32. But again, I would rather it prove it to me. So after you get a low swept, right? Let's say we are to, I don't know, we sweep the low that started this price run. Okay. That's when you get that bearish market structure shift, and it would look something like this. Okay. And I would anticipate a bounce like we have every single time we've taken out a low. You're going to see quote unquote volume come in. Nope, it's already here. We know when the volume comes in because it's already on the chart. And I would wait for a discount retracement into an imbalance that is yet to form yet, and look for lows again. And that's the way I would proceed forward until we reach a discount in the weekly time frame, which we have yet to do so. So that is DIA right there. So let's keep on rolling. Okay, we can get to ELF for sure. Oh, I see a bunch are coming in now. That's good. Is that a daily order block on DIA? Okay, I'll look. Where? I'm not sure where. I would call this daily chop. So, we would want an up close candle followed by a down close. I know it looks sloppy and stuff, but if we were to look at this is where we'll use this perfect example why using futures tickers can be more valuable. Let's see. Nope, no daily order block. So YM is the future, but you see how it's all like discombobulated here on DIA versus, hold on, I'm going to pair them together and look at the difference. It's just so much more clean because you're getting extra information. You're not having gaps all over the place, right? So here it is. Look at that difference. The cleanliness to this it's just not even close, right? You're getting a gap into the middle of the candle. You don't have that here on futures. You're getting a gap here. You're not getting that here. So again, that's why I chart using the futures. You're getting more information. There's more time that the market is awake and active versus, not. And that's when you just get gaps, and you don't have information in gaps. That's the problem. You don't have specific levels. Okay, let's look at ELF. I know we're going a little bit off. This is not typically a name that I would look at, but all right, let's see. All right, so from the weekly, as you'll see, I've never charted this yet. But let me just zoom out here. Okay. All right, so there's your first little shift. I mean, this weekly range is big too, but we can walk this up. So what was the price run that took out? I don't know. We could start at the bottom here, I guess. Here it is. No discount retracement, no discount retracement. And all I'm looking for is this 50% line. If it doesn't come down to here, the range isn't set. Okay. There it is. And as we continue higher. Yeah, so it's literally never retraced into discount on the weekly time frame. So that's kind of alarming. And that just right off the bat, that just I'm not, and it doesn't have to. I'm not saying it has to. I just would feel more comfortable trading stuff that has met certain criteria. So, while this not necessarily be a trade for me, I'll still go through. There's your bullish fair value gap. There's your retracement. There's your run. And on the daily time frame, we can be a little bit more pinpoint with this. But I was trying to get, and I do this for every name, but I try and get an overall picture of my bias. Where do I think price is going? And obviously here we're at all-time highs, so I don't necessarily have an upside. Okay, I think it's going to here. That would be my draw on liquidity, right? The market operates using liquidity. And here's a bullish volume imbalance. Holds it beautifully. Okay, so just worth noting when we go to the daily that down at 188, we have a weekly volume imbalance, bullish. Okay, so let's come on over here and we'll type in ELF. Okay, so right here, you'll see. And again, we can be a lot more precise because notice how, what is this right here? Okay, let's zoom over and just get the, okay, took out these highs here with what price run? Low to high, whoops. Discount retracement, check. Bullish imbalance, check. Run for highs. Mano model complete there. Okay, we'll do it again. There's your, what was the run that took out this high? It was that low to that high. Beautiful. Discount retracement, check. Bullish imbalance, check. Run for highs. Dunzo. Okay. What was our next? Let's just go to each red candle. Sorry. Whoops. Nope. And you're going to notice precision is not as good here. Why? What was the price run, really, that took out that high? And this is Jim. This goes back to your example. Low to high, discount retracement, check, run for highs. Beautiful. Okay, one more time. Okay, and you might say here, oh, well, there's a discount retracement, but it's just fibs. There's no imbalance here. If we were to go down to a 30-minute, 15-minute time frame, I can guarantee there's an imbalance down here that caused that. So as we continue, low, let's just see, no high was taken out, so I can't use that. I can use that. Bang. Okay, so here's our current daily range. What was the price run that took out these highs? Low to high, discount retracement into a bullish imbalance, check. The fact that we rejected where we did on a bearish daily order block, that would tell me that there is a possibility we see lower here. We have respected this multiple times. So do we turtle soup, meaning the fact that we didn't come back and take another high? We got into that order block, though. That's a good thing. But the fact that we rejected here, not only did we reject the order block, but you also have a bearish volume imbalance here. Okay. And we created a bearish daily order block. Okay. Do we come down into here, sweep this low, turtle soup, get deeper into discount for a run to 221? That would be favorable. But I think that move about $8 lower could occur first. And I don't know if there's any earnings or anything on this. And again, ultimately, while we were able to structure something there, just based on where we sit currently on the weekly time frame, it's just not something that I'm really all that interested in as a result of that. So, but that would be ELF. Let me just keep on rolling down. Okay, cool. So let's see. What do we got next? Tesla. Oh, the bane to my existence, Tesla. All right, let's go. So this is one that on for a bit. So currently, in where we sit now, I also just want to show you this. Here, hold on. Just for reference, okay? Not the monthly so much. Let's look at the yearly first, and we'll backtrack this whole thing, okay? So we have, what was the price run that took out these highs here, previous yearly highs, and this dates back years, okay? I'm just for reference, okay? Here's your low to your high. Here's your discount retracement into a bullish imbalance, and the completion would be up at 414.50. Okay, that's just for reference. Now, you might say, oh, that is absolutely outrageous. What are you talking about? 175 to 4, right? Okay. Look, where's the low? Did we come back down here this year and take out one more low? It's all possible. I'm not saying that, but just from a yearly perspective, it still is crazy now. What were these highs taken out? Bing, bing, low to high, discount retracement into a bullish imbalance, run for highs, right? Not that crazy anymore. You just saw Bitcoin run from 17,000 to 68,000, right? So again, yearly analysis, great. But let's go back over here and just, I guess to be able to break down my overall, idea here on Tesla. You have a monthly order block here. That's okay. And we're currently in it after taking out last month's low. So does that, and we did take out that low this past week. So by taking out that low, what's our next move? What's the reaction to this? Does that get us into this bearish monthly fair value gap? Or have we satisfied enough discount in a way to start sending us higher, right? Really, that 299 is also a target of Tesla's for mine as well. So now from the weekly to the daily, again, this is just top down, top down. Okay, so now at the weekly, you'll notice weekly bullish order block here, check. We also have this, which we haven't completely disconnected from, which is, that is a bullish fair value gap on the weekly time frame, in addition to a previous bearish order block. Bearish imbalance, turn bullish, right? There it is. Okay, that we would call an inversion. Okay, so you have an inversion there. This is where things get a bit messy. Okay, so if we're to take out this low right here, it gets messy because we get into, while still a bullish fair value gap, that would technically disrupt our current range, which we have as our low to our high. Discount retracement. Here it is. I'll just show you guys zoomed in. Whoops. There it is. Okay. And again, even if you want to use that low, there it is. Boop. Discount. Gone. Okay. So that was the completion of my model there. So losing that 152 is a little sketch. Okay. To me, losing that, and there's a chance you see these lows, which is dangerous. Okay. So that's where I'm at currently on Tesla. If we were to look at it from the, this is all in the yearly. Whoops. Close without saving. Let's go back to the daily here, and we'll look at the daily. Here, we swept yet another low, holding above previous sell side liquidity on yesterday's low, which not a bad thing. Here's a bearish fair value gap. But again, we can even look at it like this. So the fact that we took out that low and maintained a hold above it, minimally, but maintained a hold above it. Okay. I'm going to remove that for now. We can even look at it and say to ourselves, okay, if this is bearish, we can look at it from that bearish perspective here, where you have this low taken out with what price run? Low, high to low. So our discount retracement in this current situation would be 189.65. Okay. From there, you have one big bearish imbalance, but you have relative equal highs above at 205.60. Right. So with CPI this week, I am anticipating a pretty big move, I would say. So if that is the case, I think our answer will come shortly here. And we're going to have to wait and see. That's basically where I'm at. I mean, even if we were to go to the hourly, we'll look at the hourly. We held on to that hourly bullish fair value gap right here. We do have a relatively large bearish imbalance right here, but this on the hourly time frame, on a short little blip in time, what is our current structure? Okay, on a short term basis, okay, we took out that high right there. Bang, that shifts market structure bullish. Okay, very small time duration. We took out that high as well. There's your retracement into a discount imbalance. So really important for next week to me. So that would be Tesla. What a headache. Okay, so we'll continue moving on here. Let's see. Pan W, another annoyance. Okay, so ready? Here's Pan W. We'll go weekly and then we'll go daily. So here's where we currently sit on the weekly time frame. Here's our bullish price run. Here's our discount retracement. Here's our turtle soup. And this is where we currently sit, still holding on to that bullish fair value gap. So not bad. Despite that harsh move down, we still have a bullish structure, and we actually turtle souped it too, which is bullish, and we're holding above it. So now to the daily, Pan W. Okay, here's our gap down from whatever it was, and again, look, more information here on the weekly time frame versus the daily. We have that imbalance rather than just a massive gap. You'll notice our respect for 50% of that bearish imbalance right there. And you can look at it from multiple different perspectives, but where we currently sit on our most recent price run, you have your low to your high. Here's your discount retracement, and this is where you want to hold it, which is right here, 170, 171. Below that level, I think you can get deeper into discount, which you have that imbalance right there, 258. That still meets the criteria for your weekly setup as well. So that would be here, turtle soup, that low from earnings. So that's Pan W. Let's look at the hourly too. This is where we currently sit. I drew these lines like 2 weeks ago, but there she blows. There's your retracement into discount of your range here. And right now, this is what you're working on. That's your hourly bullish fair value gap. Good. And that's where we currently sit. So very similar to the Tesla situation, would be an important spot for a little hold up to get us going here. So that's Pan W. Let's see. Pan W flipped cycles from bullish to neutral. All right. Let's see. Apple. All right, Apple. Let's see. We talked about Apple on what was it? When was the last time we did this? Maybe Thursday night? Yeah. So just worth noting, when you have these imbalances down the way that we have, let's see if we can use previous information as a way to grant us some more information. So just look at this chart, and every time that we've, quote unquote, made a low, look how it's happened. So just look. I'm taking a drink while I do this, but I'm going to move my cursor here. Gap down, bullish order block. 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 So Apple really needs to save itself, okay? Or we're going to see at the very least. And this is a monthly fair value gap at 159. But let's see. Come on over to the daily. Let's see if Apple shifted on the daily. I'm not so sure. Not quite yet. Dangerously low, but not quite yet. So here's just that bullish volume imbalance. Ding. Bullish order block on the daily. Beautiful. Okay. This breaker did all it could. 1, 2, 3, 7, whatever it was, and ultimately fails after a few bounces. But this is your current range on the daily time frame for Apple. And yeah. Stick saving a beauty? Question mark. Again, I'm not talking out of, nothing. Gap down, order block. Gap down, order block. Gap down, order block. Right? Gap down, order block. So, yeah, that's gap down, order block. Gap down, order block. Gap down, order block. So I'm just saying, is this the kick saving a beauty? Because again, if we're looking at the daily, this is where you do not want to go below 165. That really blows it, in my opinion. That would shift market structure on the daily time frame bearish. And that's not to say we couldn't have looked at this from a bearish perspective on a short blip in time, which you absolutely can do. I'm not trying to say you can't do that. Just for me, and looking at a overarching picture, that's not how I do it. But let's see, ready? Just simply put, where was our little daily little shift? If we're going to look at it from a brief point of view, we took out that low with that price run. Gotcha. Okay, so ready? Here it is. This already completed. Bing. Okay, here it is again. One more time. discount retracement, taking out those lows. There's your discount retracement into a bearish order block. There's your dumper. Okay. Next, come on over here. Here is your overarching range here, low or high to low that took out these lows. There is your discount retracement, bearish imbalance. There's your puke. Done. Okay. Next, again, daily perspective, low, high to low that took out these lows. Okay. What happens when we take out lows? Typically, we bounce. There's a bounce, bearish imbalance on the daily in discount. There it is. There's your flush. So your current daily, if you're looking at it from a brief, tight window, is this. Where was it? Right here. Whoop. It's a pretty big range. Okay. Let me just remove the bullish idea for a sec. But this is what you're looking at. You got this bearish imbalance right up here. Okay. Let me remove that. Where else? You got bearish order block right here. I don't really note those. That's a bearish volume imbalance or gap down showing you urgency to get going. So here it is again. And those are our discount imbalances right there on Apple. So I think Apple's moving higher using all the stuff that we just talked about there. So let's keep on moving. The screen gets blurry sometimes because we have 1,000 people watching the stream. I think that's what I'm thinking. Okay, so sorry, I missed your PDD there, Fatih. We'll go to PDD. Let's go. Let's see what he says. PDD. It's my must watch for next week. Setback to 50% discount at 106 previous high, and resistance was also 106. I'm not going to mention the SMAs because I don't think that they're useful. Weekly bullish fair value gap, so much confluence. Okay, so let's look at this. All right. So here's that was a daily. Sorry. Let's look at the weekly. Yeah, so I have it a little bit differently than you're seeing it here, but I have my low to my high. Here's my discount retracement. And yeah, this is I like these because the way I look at them is this is either the best long you're gonna get or the quickest stop out you're gonna get. Because at this point, where does your trade really go bad? And to me, it's something, simply put, I would be using the candle that created that imbalance as my stop at 107 for a potential run to 152.99. That would be the completion of my model in that situation there. I think what you have is probably this or something similar to that, because you're saying that we're at 50%. So my range is just a tad differently than yours. And the reason why I wouldn't have my range the way that you have it is because we have retraced into a discount imbalance already and made that next run higher. Let's just confirm all of this to make sure that mine's accurate here. No discount retracement, no discount retracement. So, oh no, I'm sorry. So you were right. We never retraced into discount here. So, yeah, but here's a bullish imbalance here. You got another. Whoops. Good. Bullish imbalance here. But by me doing that, and you're going to notice that your potential downside risk is much greater as a result, because in reality, this trade doesn't go bad until about $75. But the idea would be from 110 to 152 on a weekly perspective. So let's look at the daily and just make sure. Oh, baby. Relative equal lows on the daily. That's not ideal. So let's just go back down and see. Okay, so if we're going to use this, because that run took out these highs right here. So from low to high, no discount, no discount. Here's your discount on the daily. That would be a bullish fair value gap down there. Here's a bullish volume imbalance here, holding on for dear life. You have a daily order block right here, very minimal, but low, followed by an up close candle that takes out the high of the previous. That would be your order block. So yeah, I think this is gotta be time for a move, or it's gonna get melted. So that would be PDD. The market maker algorithms really are designed overall long term to seek higher prices. Imagine an AI auctioneer. You are absolutely correct about that. You know, we can go back to the COVID lows. The COVID lows were literally just a discount retracement. But that would be that. Let's keep on going. Um we did Tesla. So Florina, I think you were here for that, but you're welcome, Rima. So let's look at SYM, IONQ, Oracle, and then I'm going to cut requests, but I'm going to just keep doing mine, the names that I usually look at. I got a couple more. I got a bunch more I actually got to look through. So SYM. Okay. All right. So I don't have this one charted out just yet, but all right. So from the weekly perspective, there's your higher time frame liquidity sweep leading to a reversal. Okay. So what was the price run that began to take out that high? And I would put it simply as this: low to that high. There's your discount retracement. There's your run for highs. My model is complete. Okay, on to the next price run that took out this high, this low to this high. There's your discount retracement. There's your run for highs. Great. Okay, one more time. Discount retracement. Oh, stop short in its tracks. Okay, so here's, I'm sorry, I should have done this. There's your discount retracement. There's your run for highs. Okay, so there's your low that took out this high, too high. Here's your, whoop, nope, failure. No imbalance down here in discount, right? Why didn't the fibs work, man? What's going on? Because they don't. So yeah, no discount imbalance. And you see we melt and we shift market structure. So that is a bearish market structure shift. What was the price run that created that bearish market structure shift? There it is. There's your retracement into discount. And right here, I bet you when we get to the daily, you're going to see a daily imbalance. But if you do not, here you also have this. I bet you 50% of our range. Bing, 50% of our wick, I should say. There it is. And there's our dump. So yeah, while this is still holding on to this bullish fair value gap right here, you technically don't have any untouched bearish imbalances above. So yeah, this is the absolute definition of something that I would not touch. And here's why. I think I can give you a perfect explanation as to why it would go up and as to why it would go down, right? And I'm not a furu, so I don't do that. But that's that just from the weekly perspective. I'm totally neutral, so totally something that I would not be playing with. Now let's go over here to the daily time frame. Right, here we go. Okay, so our most recent run. Okay. All right. So believe it or not, the daily don't look too bad. Okay, so we're kind of disconnecting from that higher time frame POV, and you'll notice. And again, we don't have any weekly imbalance right now, although in a bearish structure. Okay, this is the only thing that we were working with before, right there, and that is a bearish fair value gap. Okay, so the completion of the bearish model would actually be, hold on, high to low would be down at 29.62. If we're looking at it from a shorter duration bullish perspective, you've taken out this high right here at 47.35 with what price run? It was this low to this high. Do not love these relative equal lows. I know it's a couple bucks, but they're close. So again, if somebody's going long here, right? Makes sense. What has to have happened here? Somebody had to go long again to protect those stops. Yeah. So this would be your current run, taking out that high. That is a bullish shift right here on a smaller time duration. Here is your bullish imbalance on that smaller time duration. And so far, so good. You're holding on to it nicely. So a run to 59.82 would absolutely shift market structure yet again bullish, and ultimately would probably complete that bearish and completely take care of business there. So again, just not really one that I'm all that interested in right now for that reason. But let's see. Okay, we'll go to IonQ. IonQ. Okay, so yep, we do have this one charted. Very nice. Okay, did it sweep that low? Yes, it did. Very nice. There you go. Okay, so what was the price run that took out our previous high or whatever it was? Oh, so here was the thing. Yeah, I remember this one. So again, this is very similar to that last one. You have your bearish structure, right? Think about it. Each one of these never gave you a pop to 50%, right? Still haven't. I don't believe. Oh yeah, we did. Whoops. Okay, so there it is. There's your 50% retracement. Is there a bearish imbalance here? Nope. All we have is this. That's what held us back. A weekly bearish volume imbalance. I don't think that's going to hold up very well, but if we look at our most recent bullish price run, you've gotten your discount. Boom. Okay, there it is. And hold on 1 second. I got to just zoom in more. Okay. So here's your price run that took out that high with one boom. Okay. You got your discount retracement. New high. Here's your new weekly structure. Low to high. Failure. Where was it here? I'm sorry. I got to move that down a little bit. Whoops. There it is. Okay. Discount retracement. Took the low. Okay. So here's what we're working with. See, we can be even more precise with this. Good. This is what you got to beat there, KD, right here. 1261 to 1333. We beat that. You get over 1550. You got a bullish market structure shift, and this thing could go berserk. So that would be I on Q. Let's come back over here. No problem, Tony. All right. Let's see what we got cooking here with, oh, wow, 1,100 people. Thanks for joining. Thanks for sticking around. All right, let's look at Oracle. Oracle. I like the Oracle. See if we got any catastrophic change. Okay, so ready. We zoom in on Oracle. There's your bullish price run. There's your, whoa, we didn't take it. What? Relative equal highs. Dangerous for the bears. There's your run below. Turtle soup one more time. So we got in, satisfying this bearish imbalance. Turtle soup, run one more time. Stuck in the mud, right on it. Bearish fair value gap right here, or bullish fair value gap right here. Boom. Yeah, so far so good. So my model would complete on Oracle at 127.54. Let's look at the daily if there's any opportunity. Break of high creates bullish breaker. Okay. See, these are old, but low, high, lower, low, bing, bing. Let me just get rid of these. Okay, so this is where we currently sit. Your bullish price run is here. Low to, whoops, high, high, discount retracement. Is there a bullish imbalance right here? There she blows right there. Good. Okay, there's your run. And currently we ran into this bearish volume imbalance, and that's caused us a little bit of a slowdown, but nothing much. You'll notice on the daily time frame too. Let's zoom in here. There it is. Boom. Okay. Look how we closed last week. Friday, I mean. Huh. Not bad. So yeah, I like Oracle. I think it's a good look. Yeah, and simply put, let's just see on the hourly if there's actually. I traded this one a couple weeks ago, actually. So actually, the hourly doesn't look all that forgiving. I got to be honest here. Maybe we do get a little bit lower into discount of that range on the daily. Here, let's see. I got to come over here. What was the run that took out that high? Again, I'm going to just try and keep it tight. There it is. Whoops. Okay. Here's a bullish fair value gap. Did we hold it? If we held this, never mind. Yeah, never mind. Okay. Yep. So turtle soup, so far so good. And this is a bullish order block on the hourly. So never mind. Not bad. You got two big levels ahead of you. So it might not be as a quick of a rip or whatever, but I think Oracle looks pretty good. Let's see what else we got here. IGV. Okay. Dallas Banker. Okay, here is okay, I don't have this one done charted, but let's do it over here actually. Okay, so ballistic, oh, relative equal highs. Yeah. So this would be one where not really that tradable for me. it doesn't really meet like the criteria for me, but you will notice here you have your low, high, lower low, break above. We would anticipate this to act as our breaker. So the high candle of that sequence, we haven't quite got there, or we didn't quite get there, I should say. This retracement here gets us down into this bullish volume imbalance perfectly to the tick, and it goes and it's gone from that point. So the price run that took out, well, let's do this first. That high is, whoops, that low to that high. Here's your discount retracement, bullish imbalance. My model completes at 74. Great. Okay, so we keep on moving here. Slide this sucker up. There she goes. Okay, so this is where we currently sit. So again, not necessarily a spot where I would be like clamoring to buy it, but I think it could still go higher and sweep those relative equal highs over there. So here's just some imbalances down in discount, because that imbalance that we're currently in, while yes, it's valid, it still plays. Here's another one right here. It's not quite in discount, and I just like to do it that way just because it limits my risk for the downside of what I could potentially be going out. So in this case, it would be essentially a $5 reward for a $19 risk, and it just wouldn't like line up too well for me. So let's do MSTR. This one is ballistic. Okay. Aha. Mando model complete. So ready? Here is your whoops. Oh, actually no, I lied. Never mind. Let's just come on over. Oh yeah, I mean technically it did, but here. I was looking at something else here. Whoops. Here it is. Low to high, discount imbalance, check, run for highs, done. Okay. So it did, but not what I was referring to 2 seconds ago. Here, let's zoom in over here and we'll see. Okay, so even our most current price run. Oh no, it did. It just went ballistic after the fact. So what was the run that took out that high? Low to high, no discount retracement. There it is. Discount retracement, gonzo, model complete. And we took buy side up here. So I know it's the hot thing. Everybody wants to buy this, clearly. But yeah, just another situation, just not for me. I'm still bullish on crypto and stuff, but just a huge run. And the way that I operate, I just like to see them get into discount. So really what our range would look like now, and this is a massive range, would look something like that. Right? So 50% of that range is sitting about $500 less. That's again just the way that I kind of look at that. So and here's really deep in discount. So that's MSTR, but ballistic. So all right, so now I'm caught up on everybody's requests and stuff, so I'm just gonna do these for myself because I post them throughout the weekend, and I know you all see them because the views are high. Would it kill you just to push the heart? Really? Would it kill you? I don't know. All right, so here's NASDAQ. I know we already went over this one, but I just got to save it up. Okay, Tesla. All right, we'll do a post about Tesla. This is all charted up as we see. Yes. Okay, that's good. All right. Let's zoom it right there. Good. Very nice. Okay, AMD is one that I've been looking at, but again, just really not interested in it. Again, I don't call top, so that defeats the purpose for me. I'm just kicking myself. I sold my AMD after buying it at $90 at 132, and we're almost $100 over that. So, yeah, so that was my model. Low to high. There's your discount retracement. There's your run for highs, and obviously we got nothing to our left to kind of give us a basis for this trade. But even a couple weeks ago, people were bearish on it, and if you type in at Mando Trading with the money sign AMD, you're gonna notice that to me this was extremely bullish, holding previous all-time high, and we took off again. So, that's currently where we sit. So our range on the weekly time frame for AMD is now low to, whoops, here it is. Yeah. Big range. Okay, so again, this doesn't mean that it's done, right? We really don't know. It's done when they tell us it's done at this point because we have no information to our left. There's no liquidity to be unlocked here. It's got to come out from those people who are happy with their longs and time to look for something else. Um, but yeah, currently this is what we're looking at on AMD. Massive range. Not interested. Doesn't mean that it's done. This could keep going. I'm not saying that it's done at all, but that would be AMD there. Here's NVIDIA. Again, very similarly, absolutely shredder. Okay, and literally my thoughts exactly the same as what it was on um, AMD. But let's do AMD on the daily time frame just to see if there is any sort of opportunity. So even on the weekly or daily time frame, we had our low to our high, discount retracement, bang, gone, beautiful. Okay, and you'll notice we consolidated for a little bit on all these semi names: AMD, NVIDIA, SMCI. Here's that. Okay, low to high, discount retracement, goner. Okay, great. So here's our current daily range, which still not in discount of that daily range just yet. So we're looking at this bullish imbalance down here. This is a fair value gap in a sense. So it really goes from here. Yeah, there's just a lot of support being formed on this. And that's all on discount. So your discount of this range is beefed up. This is a bullish fair value gap, but again, we don't have any information to the left, so we don't know if this is done so or not, right? That's the bottom line. It could very well get into this bullish fair value gap and continue running, just not an opportunity for me because it's not in discount of the range. So, so for me, I'm going to be looking at a discount situation here. And again, when does that happen? Good question. Anybody who says they know is kind of just guessing. So all right, so that's NVIDIA. Here's PanW. We spoke on that one. Roblox, same situation as last week. The snoozer. But there it is. Same situation in that discount bullish fair value gap. This time swept multiple lows before wicking its way back up. So that's kind of encouraging. For the bulls, you have one bearish fair value gap here to work with, and that is about it. You have relative equal highs above at 47.67 right here, and then you have buy side liquidity with minimal resistance above it at 53.88. So that would be Roblox, and you'll notice here bullish breaker on Roblox, low, high, lower, low. Here it is. Okay, so there, that would be a breaker. So that would kind of offer you that idea that we will likely shift here, which still haven't. We're just kind of chopping around waiting for it to happen here. So that is Roblox. Okay. I guess I can post this one this week. That's fine. Apple, most definitely posting this one on Apple. Let's see. This range right here, this is our monthly range, believe it or not. So I'm gonna remove that just for right now. And this is our what's the word? Our weekly range. So yeah. Apple, will it fumble the bag? If it fumbles the bag, the market's gonna retrace. But not dead just yet. So that's what we're sitting on Apple right now. Okay, Snowflake, another one, deeper into discount. That's I. So you have discount and a bullish breaker here. This is where I want it. Yep, we're in a bullish breaker right now. On Snowflake, notice the respect for the 50% of that level specifically. Where is it? And I know the insider just bought and stuff like that. He must follow me or something. But there's your bearish imbalance. So this week, really, you kind of want to get going. I'll say that. And with CPI, I'm sure PPI is this week too. I would expect a big move to come at some point here. Directionally, I laid out kind of both of the, I guess, ideas that I had. And I have to wait myself. So that would be Snowflake. Let's see. Do I have that little thing? No, I don't. All right. So that's Snowflake. I'm not going to post this one this weekend. Maybe I will. Forget it. Why not? I'll do it. Drop the logo on that sucker right here. Great. Okay. Also, I just want to look at one thing here on snow because we have a massive weekly range. I just want to see what the yearly kind of looks like. Hold on. Ready? Let me zoom this out more. Good. Whoops. Sell it. See? Let's zoom it. Good. Okay, so this is what we're currently seeing on here. I'm going to pull up my yearly chart again, though, and see. I'll explain in a sec. No. Okay, so your year. Oh, no, this is. Yeah, it should be yearly. What the heck? So here's your yearly. Okay, so ultimately, it is a bearish run with the bearish order block up here. Let's go to the monthly. Whoops. Month. Okay. Okay, so you have a bearish monthly structure. So high, low, discount retracement, dump. Okay, so this is what you're currently looking at in terms of your range. Not quite at 50% of your range. And you don't have any bearish imbalances up here. So that's worth noting. Absolutely worth noting. So by the end of this month, this is what Snowflake needs to do, or it's in trouble. Snowflake got to get back into that monthly bullish imbalance. If it does not, then I think we'll sweep some lows. Not necessarily 110, but sweep some lows. So we'll revisit that one for sure. Okay, so that would be Snowflake. And I don't know if I screen grabbed it yet, but here it is. All right. So let's go to let me just check chat. Oh, you guys are still yeah, so Eduardo, I did pan W already. I am most definitely not a bear. They're ATL. Not yet. When it shows it, I will. But Melly. Okay, we can look at Melly. Melly and O are going to be the last two that I do the requests on, and then from there, I'm just going to do the ones that I got to do. So low to your high, not quite discounted just yet, but we're approaching it. So this would be a turtle soup into discount at 14.83. And your deeper into discount would be here. Are you dealing with a weekly bearish fair value gap? Minimal. You are, though, here. Very small, if any. I'm going to zoom in just to make sure. Yeah, okay, so it is. Very small, but still a bull structure on Melly, just not in discount yet. So let's see it get into discount of that range. And then let's look at O. Who is that, Cat? Yeah, I knew it. Yep. Looks good there, man. So here is O. Good. So my model here would complete at 60 some odd dollars here. There it is. Whoops. Okay. Yep. Why did we reject where we did? Let's just draw that. You have this overhead too. So hold on. Whoops. You have this sneaky volume imbalance. Okay, so there it is. That's what you're working with on. Oh, there are resistance levels here, but don't really anticipate them meaning anything other than just a little bit of a speed bump. So that would be O. All right. All right. So what other ones did I want to do? Bitcoin. Yep. So I can victory lap. Thing of beauty. Low, high, discount retracement. There it is. So beautiful, and beautiful. Okay, let's just draw this in there. You're going to have a new range, but the new range is much different than what we have right now. So there it is. what was the price run that took out that high right there, and you can look at it from this low to that high. So does Bitcoin give us a retracement back to 54K? We'll see. I don't know. Who knows if this is Dunzo or not, but all I know is the model is completed. So let me just do this one more time so I can fix that alert. Okay, where do I have it? I had it here. I would want it here now, I think. Yeah, that would be nice. I don't know if we're gonna get that just yet, but so yeah, that would be Bitcoin. Now we did SPY, we did Oracle. Here's, you know what? I'll do Oracle again here. I just want to screen grab it. So, whoops. Let's zoom in. Zoom in again. Beautiful. Okay. Here it is. Let me make this look pretty. Okay, so there's Oracle. Relative equal highs chilling up there. Still good. I have all these long sell alerts from when I took the trade on it a couple weeks ago. Let me remove these. Okay, good. Now let's scroll it over a little bit more. Okay. And there's Oracle. End phase, my baby. Get ready. If you aren't already, just type in @MandoTrading with the $ end phase. This was added here. So yeah, end phase 139.65 would be a beautiful, beautiful site. So that's where we currently sit on this one. Do I have my little logo thing? I do. Let me bring it over here. Okay. What do I have here? Oh, whoops. Didn't get there. But there's end phase. Great. AI has been one that we've been on for a long time now. Here's what you're currently working with on the weekly time frame. This is gonna, I want to see it at 48.87. That would complete my model. Notice how we did reject this bearish fair value gap. So again, every single move that happens on here can be justified. There it is. So that would be AI. Not bad. So next week we got the bullish fair value gap. If you go back to last week's call, you'll hear me say, yep, I want to see it create that bullish fair value gap. So anything above this 28.69 is a good thing for bulls. And you kind of just want to get into there and get out and head up to that. So there would be AI. Upstart, very similar situation. Yeah. Here is your discount retracement, and so far you're holding on to that weekly bullish order block there. Even if you want to look at it from the weekly perspective, 79%. Here is a order block on the weekly, and ultimately 49 is the first target. Second target would be $72 on Upstart. So you are dealing with a lot of resistance. Could take time, but I know this name is like heavily shorted, so it can move fast. That would be Upstart. Amazon I already did. Netflix, yeah, so Netflix, where we currently sit on it, looking at it from the bearish perspective, you are kind of losing it, bears. So honestly, I would not be shocked by a bullish order block and a run to 700 over the next couple of weeks. Would not shock me whatsoever. But you aren't forming imbalances here. That's the one sketchy part about it. And we just took liquidity here. So right there. So not interested, but Google, not bad, Google. So believe it or not, before all this madness, Google was the one that looked the worst to me. And it kind of satisfied its garbage first. But right now, it's not too bad. Discount of a bullish range. Here is your range set. Whoops. Okay. Oh, crap. Here. Pull this sucker over. Yep. So there's Google. Got down into here. You'll notice on the weekly higher time frame perspective, like that would be of interest to me if we were to get down there for share purposes, but I don't know if that's happening yet. So Meta, no, not really. Boeing, still fine. Just a matter of when. When. Do we have to get into here first? If we do, that's annoying, but hold on, let me pull this down. Because I've been in Boeing for a while now. Here, okay. All right, that's Boeing. Probably not post-worthy because it's a weekly chart and it could take forever. Here's Lockheed Martin. Pretty good. My model finishes on that at 466.27. So I've been posting about this one. I'll do a little screen grab on it, right? Microsoft, not interested. Disney, yeah, so I think Disney's going to 118 and then 126 after that. Carvana, ooh, low, high, discount retracement into a bullish imbalance, run for highs. My model completes. Here is our current set. You have yet to get any sort of retracement into discount. You'll notice I had this, but we didn't come down, so I got to move it because the range is now different from what it was, and that's Carvana, so not really interested there at the moment. Oxy, that's a pretty good week. So you created that bullish volume imbalance there. You want to see that run up here and take that 61.94. Ultimately, no imbalance that you're dealing with until really here, which is 63.44. Shopify, so far so good. I want to see it get down into here into 63, and then from there, I'll be interested again. SMCI, another name like NVIDIA and such, not interested. Apologies. So let's do this. Hold on. Do I have that picture? You might say, why do I put pictures on here? And these end up in other people's groups and stuff a lot. So just let it know who it's coming from. Here, there's that. Good. Mara, beautiful. I love this name. It's like the fourth time I've been playing this sucker up. So with Mara right now, you got your low, high, discount retracement, bullish imbalance, run for highs, check. Now your new range, low, high, discount retracement, turtle soup, took out higher time frame liquidity, bing, 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 bing. And yeah, so ultimately looking for 3409 over the next, I don't know, couple weeks here. But that would be Mara. Now, SoFi, just so annoying. This is the most annoying name of all time. But Turtle Soup, beautiful, good hold above. Got into this bullish imbalance down here in discount of our bullish range. So expectation would be, although you have two bearish imbalances above, 1049, 1170. But again, time takes forever. It stinks. So that is SoFi. Still liking that name. So Palantir. Oh, what a close. Okay, so Palantir took buy side liquidity and then ended up closing right back inside that bearish imbalance right there. Good. Are these overlapping? Yeah, they are. Okay. So we'll leave it at that. This is our current range on Palantir. No discount retracement yet on the weekly time frame, but I think it's only a matter of time here, folks, for this good guy. Let's just look at the daily and see. Look at all of that. It just trimmed away at. And I haven't charted this in a very, very long time on the daily time frame. But yeah, so 4 standard deviations would put you right at 29.33, my target. Let's see if oh no, actually it wouldn't. It would be different. So low, high, discount retracement, run for highs. So I would then move it to oh wait, no, I'm sorry, turtle soup. Yikes. Here. Okay, turtle soup. Yeah, no. Yeah, I don't buy the fibs. So so yeah, that's Palantir. Let me see. Do I have? Yeah, I do. Put this here. I'm gonna zoom this one out a tad. And just for reference, this is kind of where it's getting, I don't want to say spooky, but we're getting into a spot where it's got to shift market structure. So this is kind of a situation where it's like, all right, is this a legit company or not? Right. And I think it is, but we're right at 50% of our overarching bearish range dating back to 2021. So you got one imbalance here, and beyond that, smooth sailing. So that's where I'm at on Palantir at the moment. let me just draw one of these on here. So that's buy side. All right, and I'll drop this here. I'm going to go back to the chat in a second. Sorry, I know I haven't been checking it here. Okay, there's that. Download. Beautiful. Okay, let's see. Yeah, I'm not going to look at Snap. That's kind of a trash one. You know what? It's the only one. I'll do it really quickly. Yeah, low, high, discount retracement. So not bad so far, but you're working on imbalances here, so it's just a tougher short-term trade, that's for sure. All right, so back to what I was doing here. Where were we? Palantir, ARK. Okay, so a nothing burger of a week for ARK here. Okay, there she is. Kathy Wood, give us that 54.52. That'll complete my model right there. Oh, whoops, but Kathy's gonna need some Tesla loving to get going here. So, oh, whoops. And I'm pretty sure, I mean, not that I really care about this, but somebody's saying that she was buying more Tesla. So just enhanced exposure to a Tesla run. That'll put her over 54.52 for sure. Coinbase just ballistic still. Love to see it. So here's our most recent run. Not quite a discount retracement like Mara gave us, but there's Coinbase. So Coinbase in that overarching bearish run is doing its thing. So I'm thinking, again, this is where it gets a little bit trickier, but you're looking at, let me get rid of these now. I had these just to show. Why did we reject here? That's why. Why did we reject here on that weekly candle? That's why. Good. Yeah, this is bullish. They made a imbalance through previous buy side. So there's your continuation move. So this is what we're cooking with so far. 281.99. Maybe like a little retracement into here. That's an inverse, so it was bearish. Now I'd look towards a bullish run, so a boop up to 281, 282. So I'm going to just keep that where we have it, and I'll map it this way. And let me get rid of this one for now and put it up here. Okay. Good. Coin's done. Baidu, Chinese name Slugs. I'm in Baidu. It's just the slowest name of all time. Micron, wow, swept buy side liquidity and retraced right back. So here's the model, low to the high, discount retracement, bullish imbalance, check, run for highs. There it is. Not really interested in that one right now. Lucid, definitely not. ZS, 50% of the range is at 172, so got some time. Robin Hood, love it. Love this one. Hit Banana Land this week. There is whoops. Just looking at it from a zoomed out perspective here, 50% of your range on Robin Hood isn't until $45. So just interesting. So our new range, low, high, discount retracement, run for highs. My model is complete. Here it is. Good. Okay. So yeah, Robin Hood is right here. You got some imbalances to work with, but again, if we buy the idea that price likes to retrace into discount of the range, you know where it is. And let me just get rid of these extensions because again, useless. Don't need them. Come on, that's because I'm streaming. There it is. All right. Good. Okay, so here's Robinhood. Beautiful. I'll post that one. Let's see if any of these I've had done. If not, I'm calling it quits. SE. This is one that we had on here from a while ago. Fatih with the shout here on this. There it is. Swept higher time frame liquidity, aka COVID low. There's your run. Shifting to create a bullish breaker. Low, high, lower low, break above. And oh man, did we get into it? No, we didn't. Okay, we didn't get into it yet. So if we do, that would be cool. But that's your bullish breaker. Let me remove this. This is toast, which is great. Moving forward, this is also great. And here was the alert that I had set. So hold on. Let's just map out our new little mini range, low to high. Yep. So the breaker would be right at this count of the range. So there it is. So that's SE. Sweet. And 50% of SE is, ooh, it's kind of getting close. 61.37. But I'll post it anyway. And TTD. Huh, yeah, this one's gonna go ballistic again soon. Yeah, so I would love 77 again. Don't know if it happens, but look at this. Doesn't get more bullish than that. Give me one manipulation move into discount for a blast off. So that would be TTD. And I think I'm done. So let's see. All right. Oh, what's up, Soul? CLSK. This will be the last one, and then I'm done. But huh, that's interesting. Discount bullish imbalance. What's next? You have relative equal highs. Yeah. I wish I kept this one on watch, but didn't. So, all right. Well, that's all I got for today. So that is the weekly recap. If anybody's got anything from the group, just shoot me a message over on Discord and we'll get into it. I can't really answer the Twitter, what's it called? Twitter messages anymore. They get backed up. There's too many of them. And I just can't do it anymore. So that's all I got. I will catch everybody next time. And I'm going to be posting these charts up here shortly. So I'll see everybody.